Hi, and this is the Bitcoin Law Review. It is going to be a fun one, little rough and tumble. We have Tone. We were in DC. You are at my house. My dog is probably going to knock the camera over in a little bit. His name is Thor.
We got Thor
and
with
we
us.
have the beautiful Sasha and Drew. Let's start off with you, Sasha. Sasha, what company are you coming from? And thanks for being here.
Dora's helping me use the mouse.
Thanks for having me and Tone. It's such an honor. I listen to you guys all the time. I'm a Bitcoin attorney with World Block Legal.
Fantastic. And from Miami.
Tampa.
And so why do we have you in DC right now?
You're in DC.
I'm actually dating a guy in DC, so come visit him.
We're live on camera.
Nice.
Yeah.
Nice.
And I've been friends with Adela for a couple years. We used to work together at an ATM company, so it's nice to see her when I come up too. And we were supposed to go to yoga, and she's like, "Oh no, come, we'll change of plans."
Oh, this is so much better than yoga.
Right? Yeah.
We're gonna have Adela come in maybe any minute. We'll see what happens, but that's awesome. We'll probably hear more of a story from that. And Drew, what's going on? Thanks for being here. Tell us about where you are and what you're up to.
Hey, thanks so much. I'm joining everybody from Miami, Florida right now. It's a little hotter and cloudier where I am than where it looks like you are at the moment. I'm the general counsel of Athena Blockchain, and I'm also a professor that teaches a law class at New York University on crypto. And thanks for having me.
They let you teach?
They let me teach.
This is awesome. All right. Well, before Adela gets here, let's jump into my favorite topic, which is EOS. If everybody watches the morning brief, I am enjoying thoroughly this I'm going to try not to cuss, the most fun circus and popcorn movie event while I've been injured just unfold every single day. So Drew, please, from a law perspective, because we just play around on the morning brief, there's so much going on, but specifically in regards to all the news that's been coming out recently regarding their EOS constitution issues, which I'll just start off by asking you, can you explain what's going on and what are your thoughts about what's up with EOS these days?
Sure. So EOS is one of many projects that have sought to be sort of governed by its own participants. Unlike Bitcoin that started off with a set of conditions that were encoded in the way that the system functions, EOS opened up to the people who bought and owned its tokens and said, you get to decide how EOS works. And so there was a bunch of referenda, there were some proposals, and ultimately there was a constitution adopted. That constitution is sort of an interesting thing from a legal perspective because it doesn't have the force of law. There's not a court that's going to enforce the constitution. It's a voluntary agreement among the people that operate and use EOS. And what it means is that everybody decides that they're going to opt into that constitution and they're all supposed to follow the rules. But we had a couple problems. The first problem was that everybody kept sending everything over to the EOS Core Arbitration Forum. So that means every little dispute went to a group of people that were supposed to decide how to fix disputes. Problem there is that people figured out how to game that system very quickly by creating fake orders and sending them around to other folks, which led to people being scammed out of their value. And there were some other orders that were entered that basically froze other people's accounts. And this seems to go against the spirit of how these systems are supposed to work. So Dan Larimer, who's one of the main designers behind the system, came out either late last night or early this morning and said, we should junk that constitution that we've had for about 2 weeks. And he suggested his own.
Oh, sorry, we were on mute. It looks like Adela got here. The dogs are making us aware of this. Sasha, are you familiar with the EOS and their whole debacle of what's going on there? If you want to comment and jump in.
A little bit, yeah. So when I work with clients, we've typically only done Reg D for ICOs, and I get a lot of them asking, well, how is EOS doing this?
Can you just define Reg D for our listeners?
Oh, yeah, sure. So it's just a way to raise money through conventional fundraising, basically. So you have to limit it to, with crypto or anything, you have to limit it to accredited investors. So people with $1 million in assets or an income of 200 grand or joint 350 over the last 2 tax years. But with crypto, you have to also lock the tokens up for a year. So it presents a challenge because they're not liquid after they do their fundraising. And EOS, you know, they had their
Wait, so
year-long.
locking for a year, is that a traditional regulatory structure, or is that the what they're offering in crypto?
No, it's traditional.
Okay.
Through Rule 144. You have to, the money gets tied up.
Hey,
Hey.
how's it going?
Good. How's your leg?
We got a
Good.
demo.
We're live.
Hey. How are you?
We're gonna
I'm good. I'm sorry. I got my shoes in my hand.
There you go.
All right.
You're on the
You're on screen. You're live right now.
You're
So
on the big
we're
screen,
having.
and,
Oh, Thor,
Oh, wow.
be careful, Thor.
No, Thor's been good with the camera. He hasn't knocked it over yet.
All right. So we are talking about EOS, and
Okay.
Sasha, please continue. We're learning lots of great stuff.
Oh, yeah.
And we have
Well,
wine here for you. Love.
Awesome. Yes. I
Yeah,
need
but
a
we
glass of
only
wine.
have Drew another 20 minutes,
Yeah.
so we will give it back to him in a minute. But I'm sorry, go on. So Reg D is supposed to lock down your investment for a year, which is a lot harder to do in the world of ICOs.
yeah. And then so EOS, in their attempt to kind of be decentralized, they had this block 1, and then they were issuing the tokens through there, which I believe is in the Cayman Islands. So they weren't following any of the, you know, American securities laws, and they didn't offer it to Americans. I think quite a few Americans likely invested in it, but that's how they kind of got around the regulations, was not offering it to us. So
Do you know what controls
so-
like they had in place to not offer it to Americans at all?
very good.
It's generally just IP addresses, and like they could KYC the initial investors. The point is, like, that's not the goal. The goal of all of these ICOs is to convince enough rich and influential people and give them these tokens and allow them to sell this investment as soon as possible to the general public in a non-KYC way. Hi, how are you? Oh, you want to that was like with the chair.
So Drew,
Close to the microphone.
going back with you. So yeah, so absolutely. I mean, for pretty much, I've been enjoying watching EOS mess up for quite a while now. And for about 2 days, right, ever since they came out with what's going on with the block producers and then the blacklist and everything. I mean, it's just one thing after another. And that was, you know, in regards to it started coming out that the Constitution was one of the biggest issues with the governance. But now, absolutely, and Larimer is coming out with new statements that he's getting upset. So can you at least speak to, for us, a little bit about your thoughts on Larimer, and also just, you know, maybe capstoning our talk here about EOS, and also, you know, in regards to securities laws, I mean, you know, what are we looking at? Like, what, you know, are they going to be one of the few that the SEC and Clayton starts, that's my dog, sorry, starts to say that maybe the, you know, Ripple and Ethereum, and, you know, they should be included?
Muted you. Okay, what do you think, Drew?
Sure. So your first question was about Dan Larimer. I've never met the guy, so I don't want to say anything about him until I have a chance to know him. What I would say, though, is that he's looking at what the community did with the first Constitution, identifying that there have been some real significant problems and trying to do something about it. In his Medium piece that he published this morning, he compared what he's doing to something similar to what Ethereum did in the case of the DAO. And everyone's got an opinion as to whether this is a good thing or not. But at this point, it seems sort of unavoidable that the EOS Constitution is not working and that there have been some problems. There were certain decisions that were made that sought to take advantage of something that apparently Ian Grigg designed for them. And Ian Grigg, for those who don't know, is the father of what were called Ricardian contracts. And Ricardian contracts are those that are executable and read in English as well. And for a variety of reasons, they make a lot of sense to try for a system like this. But there were some sort of inextricable problems, which is if you have an agreement that's reduced to code, it's supposed to work the way it's written. And if it works the way it's written, but it doesn't capture the intent of the parties, you can either try to have somebody who can sort of rewrite the contract for you, or everybody ends up going to the legacy justice system, meaning going back to regular court to try to get some redress. So what Larimer's proposing in his new Medium post was that they should have contracts that reflect the intent, which kind of flies in the face of what smart contracts are supposed to be. I know that Adele has talked about this a lot. And Adele, I'm interested in your ideas as to whether you think a smart contract can reflect intent while also only executing the code.
Thank you so much. So my dog knocked over the video. That's coming back. But so just a question to you, right? One of the biggest things and the criticisms of EOS has been that obviously they are not decentralized as much as they love to talk about how decentralized they are. Drew, you know, any thoughts on this subject?
Sure. So the SEC recently unveiled a position that said that if something is sufficiently decentralized, then they're not viewing it as a security on a going forward basis. And everybody's trying to figure out how to make their platform decentralized. And that's the new thing that people are sort of trying to use to analyze these systems. EOS developed in its governance through this constitution to place the 21 block producers as being in a considerable amount of control. They have the ability to act functionally as the arbitrators. They have the ability to add blocks. So you got to ask yourself, if you've got thousands or hundreds of thousands of people who are holding this token and supposed to be using the system, if there are 21 people or 21 business units that are making decisions, I don't know if that's really considered decentralized. The SEC hasn't told us what it thinks decentralized is yet. So it's not fair to say whether it is or is not decentralized under the SEC's rules, but it seems like giving a small subset of people control over what's supposed to be a public decentralized system is a contradiction.
Hey, Drew, so the SEC hasn't actually said, as far as I know, like we're all assuming that they may eventually say it, but the SEC hasn't actually said that if something is decentralized enough, it's not a security. It's just an opinion of one guy, though it's a high-ranking guy. It's just a statements of one guy at an event. And he also pre-stated that by saying, from my understanding of Ethereum's decentralized mechanism, right? So if enough technical experts like a Jimmy Song, like any core developer, shows up at the SEC's office, they can like smack them upside the head to explain how Ethereum is not centralized by any way, shape, or form. No more centralized, no more decentralized than Ripple is.
Whoa, slow your roll. Can I just jump in here
Yes,
for a
anytime.
second?
Please,
Right?
please.
Let's just go back. Boom.
Please.
Okay, so this isn't law. This is some guy's opinion, right? But that some guy just happens to be like one of the top guys, who, by the way, still has a job at the SEC.
Agreed.
Right? So I think whilst we cannot go so as far to say that that is settled, you know, a settled, you know, rule or law, it's not, right? We can go as far as saying we understand now what direction they're going in, because I don't believe that such a top official would go and make these public statements with citations. Like, this wasn't just a statement. There were citations, you know, to this, you know, sort of pseudo official statement.
Right. Right. I think what Adele is trying to tell you is this is a high-ranking official. He made a statement at a significant event that had coverage where the statement was transcribed and published with footnotes. And about a week later, after Mr. Hinman made his speech, Jay Clayton, the chairman, referenced Hinman's speech in yet another presentation he made that was published with footnotes that said that Mr. Hinman's presentation is the way that they review these things internally. So whether it's binding law, it's not. However, if they're telling us this is the way that they think about these things, we're foolish not to use this as part of our analytical toolkit, so to speak. It doesn't mean that you can rely upon it. There isn't a test, but it's out there and we should all be paying attention to it.
So since we have you here, love, what do you think about the idea of just EOS having the block producers as being pretty much judge and jury when we talk about them having this, you know, constitution that seems quite strange?
Well, I think there's a whole lot of mess going on. And I mean, my question, even before answering this question, is, you know, so much of this seems to be like, you know, when you're just kind of getting ready to go out and you somebody comes to the door and you're like, I don't know, and you're like totally in your underwear, right? It's like going out in your underwear. They weren't ready to deploy this thing, and I don't understand why. At the very least, the standard in the community isn't some kind of in-depth auditing, before these things are deployed and even tested.
Well, there's not enough developers. Basically, that's pretty much it's pretty much the end of it. Like the smart developers are not going to touch something like EOS, and Ethereum is already facing a bunch of competition from Tron and from Tezos, which may or may not have launched, and like Waves and what's the Chinese version?
Neo or Nem.
Yeah.
Neo, yeah. And don't forget Ethereum Classic's around. So, I mean, you got to launch it fast. I mean, it's launch fast and break things, even though it's a lot of money on the line. They don't really care. But Drew, hey, since we still have you for a few more minutes, let's jump on to another story. U.S. investors, actually, Leah, why don't you?
Sure. And actually, Drew, I have one more question for you before we move on to the next story. I mean, here's just because Tone loves Vitalik. Obviously, we know that, he's just obsessed, loves him so much, best friends here. Just a really quick one. Larimer overhauling this constitution, is it kind of like a Vitalik 2.0?
So that's a tough one, right? They both can say that they are not able to unilaterally implement this. Like they can't just wake up one day and say, this is the Constitution now. But everybody looks to both of these guys in their respective systems as the most influential figure. So they are going to parade around as though they didn't just press a button and make it happen. Vitalik used a poll that was open for like 6 hours that had a few hundred people participating to justify the hard fork, and then he pushed the hard fork out. In my view, this isn't quite as egregious as a hard fork in that this governance system is just sort of a mess from start to finish. So tampering with it on its own isn't as big of a deal as rolling back other people's transactions. Because really, has there been any value business created on the EOS blockchain? Or has this just been a bunch of people moving EOS around? Is anybody's money going to be moved? I don't think so. So if he decides that he wants to kind of ramrod through his own version of the Constitution, people need to know that his version doesn't include a preclusion of buying other people's votes. It doesn't talk about a lot of problems that are being created. One of the issues is if there's a dispute, the two parties to dispute have to suggest their own code to fix it, which means if I make a smart contract with Adela, I don't know how to code, but Adela does. I got to figure out how to fix the code and suggest that. And then whoever's determining the outcome of that dispute is going to have to figure out whose code's going to actually do it right. This doesn't sound practical to me. And I'm not sure if whoever these arbitrators are, these block producers, are going to be able to do this in any practical way. And one other thing that I'll say before I got to take off, the Constitution that's been suggested includes a preclusion, that is, people can't change a smart contract that is acting as intended. And I would suggest that we need to really think about what intent means, because whose intent? The intent of the person who wrote it, the intent of the parties to the transaction, my intent in my example, Adela's intent. What if they're different?
Wait, okay. What do you mean people can't change a smart contract if it's
so Tone, throw on the new proposed Constitution.
Well, I know, but like the DAO was technically working as intended. Someone found something in the DAO and they
Correct. That's why I published something saying that the DAO attacker had rights. I published something saying the DAO attacker had rights because the DAO attacker basically, the worst way you could conceive of it, the worst example, you could say it was like an SQL injection attack, right? They did something that they were allowed to do in a way that caused the system to behave in a way they didn't expect, okay? That's why I wrote something saying the DAO attacker might have had rights against the Ethereum Foundation and might have been able to sue them. In this particular case, there's something in the proposed new Constitution that says that an arbitrator or somebody resolving a dispute can't change a smart contract that's acting as intended. My question is, how do you measure intent and whose intent?
Right. It's so subjective.
It's amazingly subjective. And so I'll leave you with this final comment. And thanks everybody for having me on today. It's fun to be take part in the first try at this.
Yeah, thanks, Drew. Yeah, this was this was our first episode of the Bitcoin Law Review. We are gonna have these weekly, and I think I got contacts to like a dozen lawyers now in this space. So we'll try and mix it up, and we'll try to have as many of you guys on. And
so real quick, Tone, I got a jet, but my last comment is it's incredibly hard to replicate what we have with the justice system. It's incredibly hard to create due process rights on a decentralized system. People want to have a way to do things with certainty and with absolute outcomes. But when they use a system, they agree to the rules and the rules don't operate correctly or the way that they figured, what's going to happen? They're going to go to the regular court system anyway.
Drew, thank you so much.
Thanks, Drew.
We'll be seeing you next Thursday.
All right. So long, everybody. Bye-bye.
Bye, Drew.
Bye.
All right.
Bye, dude.
Bye, Drew.
Andela, you're on the spot.
I love that guy though.
Oh.
He's so great. I love Drew. And Drew's actually, so really interestingly, Drew's actually been writing about smart contracts longer than any lawyer that I know in the space. So I think since about like 2014, he's been exploring these like very unique issues. Yeah.
Interesting. And Drew's offline, so tell us the skinny. Just kidding. Tell us a little bit about his background a little bit more. You were saying before, just his specialties. And also, before we get going, tell us a little bit about yourself as well.
Okay.
And then I have nice questions for you on our next story.
Okay. So Drew actually pays me to say nice things about him.
Oh,
so I just have to just open with that. Sorry, Drew. Just had to kind of let the cat out of the bag. But I've been in the tech space for about 18 years now. I worked on an Eagle platform like way back in the day. I think this is like an e-currency platform with some former members of Eagle. This is widely known. And then I decided to go to law school so that I could really understand all of these laws surrounding these very interesting building issues. You know, we ran into regulatory problems as well back then.
So
Post-Patriot Act.
I got a question related to Eagle. So I've been comparing Tether and their structure to Eagle. What do you think about that? Because the way I see it is, Eagle's problem was you had a centralized store of something backing a digital asset. Now in Eagle's case, it was gold. So the government eventually didn't like it. They showed up, arrested the people, and took the gold, right?
So
how is that different from Tether?
I can do you one better. So we actually have someone here who used to work at Eagle. We have Steve here who is the former information technology officer at Eagle. So why don't we have Steve answer that question? What do you think about that? Why don't you just take my seat for a little while?
I'm also realizing you look like the bionic woman.
Right, and this is what Leah looks like now because of her knee situation.
Just wait until the
and for those wondering, yes, I was at the stock exchange this morning at like noon doing the Cheddar interview, and now I'm in Washington D.C. Yes.
Andela, bring it over.
And people still wonder how come Tone doesn't trade for a living.
So, Eagle,
so
please.
what was the question again?
Are you how familiar are you with the crypto space? Yes. Let's start there.
My name is Steve Forster. I'm president of New World University. But am I in the wrong thing?
No, but like we're all kind of half in the shot. But yes, now you're fully in the shot. But the camera's that way. There you go.
And once in a former lifetime, I used to work for Eagle.
So, how familiar are you with the crypto space?
Somewhat.
Okay. Are you familiar with Tether at all?
Not really.
Okay, so here's the concept of Tether. So a couple of geniuses decided that they needed a digital representation of the US dollar. Like no one has thought of that before.
Okay.
And what they're doing is they're they're putting a bunch of US dollars in some banks that aren't actually public, because a lot of these banks don't want, I guess they don't want the attention, and the company doesn't want the attention.
So they don't say what the banks are. So they don't
say, but we're assuming that the banks actually exist and this isn't fake, because you can't get a real audit of the whole system, right? But supposedly, every few months.
Then I would assume that it is fake. But
yeah, it's debatable. There's definitely a huge debate going on. Let's assume it's real. Okay, so every quarter or so, another $250 million gets put into one of these banks, and 250 million Tether tokens get created. Now, the Tether tokens are backed by $1, and now there's 2 million of these things. And once they're created, they're being created by a company that has all of their clients KYC. And people are basically, when they want to cash out from that exchange that's creating the Tether, they cash out, they take the Tether and they move the Tether to another exchange where they can then trade it for crypto. So right now, there is supposedly $2 billion sitting in one or two banks that has a digital backed token worth $1 that once it leaves this KYC system can be freely be used and held by anyone anywhere in the world. How do you think that's going to end?
Well, I was trying to do that with a straight face and I just couldn't. So there's like $2 billion in some sort of like banking scenario when we live in a world where somebody tries to wire $5,000 and gets their account frozen, and we're supposed to believe that without auditing that this is really there. Okay. So I have to mentally process that for a minute.
So this is the system we have in Tether, and like just like 2 days ago, they created another 250 million Tether tokens, and there is no official audit that says the money is there. But even if the money is there, because eGold had the money there,
yes,
it had the gold there.
The gold was really there.
And that didn't end very well.
Well, actually, I have a law question on that.
Well, since I'm not a lawyer, that'll be fun for me to answer.
Okay, sorry.
But I did go through law school vicariously via Adela. So,
well, then continue. I'm sorry.
Well, the gold was really there. How about that? But your question was, let's assume it's really there.
Assume the U.S. dollars are there.
Okay.
Sooner or later, the U.S. government is going to say, so you have a digital dollar in market cap of $10 billion, and you don't know exactly where all of it is. That's a problem.
I agree.
Like, you know where the dollars are, so you can go and take them, but you don't know who's using the tokens.
Yeah, I mean, it sounds like, I guess in a way, it's almost reminiscent of like the very early days of PayPal, where, in theory, like they had this, they sort of set up PayPal and it was operating, and there was a lot of question about, oh, do they need a banking license to do this and that? And, they sort of, in the early days, they sort of took the Uber approach of just do it and sort of dare the regulators to stop them. And it worked out for them. So in this case,
that wasn't money.
PayPal wasn't money.
Well, no, not PayPal, Uber.
No, Uber wasn't money.
Yeah.
No. But I mean, the concept is the same in that it sort of threatens established interests. So the dollars. Your question is like, what's to stop the feds from just stealing all the dollars?
Right.
Nothing. Well, assuming that they're really there.
Right.
So they're
well, okay. So here's another question, right? Because I've been debating this one. What's worse? The dollars are there and they're at risk of straight up confiscation by the feds, or the dollars aren't there and then people just got scammed?
Worse for whom? I mean, I suppose
worse for the Bitcoin ecosystem. That's the only thing I care about, because that's where all my money is.
I would, in Tether.
No, in Bitcoin.
Okay, good.
I'm not that crazy.
Good. I would say it would be worse if it were a scam, because if the feds steal the money, then that lends more emphasis on why it's so important that we're all doing what we're doing. Whereas if it's a scam, then that suggests to lay people that everything that we're doing might also be a scam.
Good answer. Sasha, you have any comments?
Oh, yeah. Well, just what you were saying about not knowing who's holding the tokens, that kind of reminds me of in Delaware, where they said you could actually make the tokens, the token holders shareholders for the company. And it poses the exact same problem of once you release these tokens, there's really no way to keep track of where they go on the secondary market the way that there would be in a banking system where everything's so regulated. So it just kind of popped in my mind when you said that. It's really hard to keep track of who's got what in the crypto world.
All right, you want to jump on to our next story? Did we lose it?
So,
There's a
nope, she's hanging out.
Okay.
I will, given that you have to go.
you
very
have
soon,
to go.
I would love to start with you on this one. So,
Am I doing screen share?
You're good. So, we're good with having the beautiful Sasha on screen, obviously. I believe everyone would love to see your beauty. So,
yeah, I'm definitely in the way of what's good here.
Another recent story that came out was that United States investors can, in fact, legally participate in ICOs, but the catch is that ICOs have to be launched on the SEC-approved platform.
Which is what?
Exactly going to be the question. So, can you shed light on what makes very little sense? Also,
I love it. I love it.
Very simply put, which makes very little sense.
Oh my god, it's amazing. You have the license to fly your flying car. Wait, we don't have flying cars yet. Yeah, that's the problem.
We do, Tone.
Yeah, because I can't put the camera further back it up. Actually, maybe I could. Hold on, give me a second.
All anyone can see is me looking bionic.
All right, I gotta stop the camera from.
Okay, no, you're fine. No. They look great.
I know.
We don't need to be
seen.
seen.
They're gonna look better.
No, they look fabulous. We do not need to be seen. Okay, yes. So the question is, I guess let's just start with, what would an SEC approved platform for an ICO even look like?
So they're called FINRA registered crowdfunding portals.
Okay.
And with the Jobs Act, I think it was May 16th, 2016, the SEC approved these portals, and they have to, I started one during law school with another law student and one of our professors. It was a big and I'm not a partner in it anymore, but it was a huge undertaking to get this registration from FINRA. But my partner and I both had our Series 7 licenses. Mine's shelved now, but his is still active. And that
Series 7, really?
Yeah.
Interesting, okay. Nice mix.
Yeah, it helps with this, I think. But anyway, so these portals, there were 13 last time I looked, and the VC 500 is one of them. But Start Engine is one that has been pretty active in the crypto space. So you can raise up to $1,070,000 on them from non-accredited investors, and you have to go through quite a stringent.
That's one night at the strip club for a lot of these ICO creators. That's nowhere near worth the effort of creating an ICO.
We don't even know about your strip club adventures. And,
fine, I'm not ICO.
Sure. And while you continue, actually, just to add to it, if that's possible, if you could also speak to the Jobs Act. And Dodd-Frank's if possible, but Jobs Act, when we're talking about crowdfunding and what all that entails, but continue, it seemed to evoke what is trying, was formulated in regards to crowdfunding, accredited investors, etc. It seems like the Wild West. Continue.
Yeah, it still kind of is. Well, it's not the Wild West if you're using these, the Jobs Act. Like, there's very specific things that you have to do to comply with them. So for ICO issuers that want to do the regulation crowdfunding, they have to submit a business plan that outlines exactly what they're going to do with the proceeds of the money. They have to be very public about who they are. There's no such thing as a autonomous, anonymous organization. It's, you are here, here's how to reach you by mail. You're registered with the SEC. And I've heard through the grapevine that FINRA has reached out to all 13 of these crowdfunding portals and asked for a heads up anytime they get a question about crypto or someone looking to go on the portal for crypto. But I think they're encouraging, they want to help these places be sort of a destination for ICOs so that they can kind of get a rein on what's going on. And there's limits on how much each person can invest in them. If you have an income less than $100,000, you can invest $2,500 on a rolling 12-month period. And
that seems so reasonable to me.
It's very reasonable. And $1 million is still, it's nothing compared to what these ICOs are making. But if you are a prudent business owner, you can do a lot with $1 million to get your platform started and maybe even decentralize yourself enough to do another kind of ICO without being, you can, if you start off this way, you can also do the Regulation D and Regulation S in conjunction with it. So you can raise $1 million from non-accredited investors and then any amount from accredited investors at the same time.
So beyond accredited investors, my understanding of the recent of this news is that it is beyond accredited investors, that individuals are also allowed to invest and that these are fairly but quasi SEC blessed ICOs, which again makes me confused, I'd say, by what Clayton is saying, or everybody. It just seems as if the waters are a bit murky, and especially now that it's not just accredited investors or intelligent investors, but kind of everybody. I'm confused on what this news is that's coming out. So can you also speak to the fact that it's not just accredited investors?
Sure. And it's been available all along. So it's not a big new thing that came out recently. Like companies have been able to do this since, technically since 2016. But I don't know. I know one where a client used it and it's been successful. They're in the process right now. They didn't raise the full million, but they raised like 500,000 this way. So they used Start Engine, which is one of the 13 portals that have the registration for FINRA. And that registration for the one that I used to work on, it took like a year and a half to get registered with it. Like they did all kinds of background checks on the portal owners, and the portal itself takes a 5% cut of the money coming in typically. So it's basically like a crowdfunding, Kickstarter. It's kind of almost identical to that, except the person gets tokens, or they could do it also with shares in the company. And then you have to have audited financial statements. Well, if they're audited, you have to use the audited ones. They have to follow generally accepted accounting principles. You have to limit your advertising to tombstone ads. So that poses a challenge if you're doing it in conjunction with a Regulation D for accredited investors, because there's no advertising restrictions there, because you're limiting it to the sophisticated people. Whereas if you're advertising to the non-accredited investors, you can just say, here's the company name, here's how much we're trying to raise, go see our website, and the website has to be displayed through the crowdfunding portal, so they've approved everything. And they have to file this Form C with the SEC. So,
all right,
my question is to you is, simply put, what do you think?
Okay, so actually, you and I have to speak a little bit louder because the mic is on that end. If I move it closer, there's interference from the laptops. Just a heads up. So my question is, up until now, so all of this, I find it like it's probably really, really bad for the regulators, because they finally approved regulation for the little guy to invest, like in all these crazy stuff. Like Indiegogo came out and that was approved. And then like Reg D, which allowed, some of the non-accredited investor stuff, right? But when all the regulation finally relaxed to the non-accredited investors, this happened recently. This happened like this decade, literally in this decade. They didn't see the unregulated like trading of this stuff coming, right? Mm-hmm. So like it's gotta be hitting them like, we didn't actually approve, like we approved the little guy to invest in something for the long term, not to trade it for the highest bidder within 6 months, right? So how do you think that dynamic is going to play out? Well, because I know that wasn't the intention of the regulators.
Yeah, and I think Jay Clayton made the statements recently that he didn't want to be limiting the little guy from what could be good investments, but this is sort of the solution to that. But the regulation crowdfunding also still have to lock the tokens for a year under the Rule 144, so they have to wait at least a year before they can trade them. But after that, it's a free for all, and who knows what the value is going to be after a year.
And here's the thing, though, right? I know, like just common sense. When that regulation came out, yes, you can invest. You are broke. You can invest in crazy stuff. You can hold it for 1 year, and then you can move it. But it was still under the assumption that the product was going to be somewhat illiquid and somewhat more enticing for you to keep holding it, not for you to pump it on social media and resell it to potentially a 12-year-old.
Yeah.
What do you foresee the SEC doing moving forward? Because this does, at least to me, and I'll be contrarian or obnoxious, to be very hypocritical.
You think that the regulation, well, I don't think it's that hypocritical because it limits it to the $2,500 that the person can put in. So it's
No, but they have 1,000 ICOs to choose from, so that's
but they can
$2.5 million.
So
no,
with-
it's a each
so
person.
with
It's a personal
Kickstarter-
cap of the $2,500.
Oh, it's a personal cap.
Mhm.
Oh, so they can't
they can
invest
do one,
$2,000 into a dozen ICOs.
Right. They can invest that much
Oh.
across as many ICOs as they want to choose.
Okay, so they actually can't lose all their money if they
Right.
follow the
So,
regulation.
but the question is, so right, like you were evoking Kickstarter. People make fun of me. I'm not going to say evoke anymore. You were saying Kickstarter and Indiegogo. With Kickstarter, you have to be a project specifically.
Mhm.
So maybe the question to you then actually is there any baseline tech or anything beyond the ICO that you have to claim that you are doing, or that is beyond the, like, that there is a company beyond the token
Mhm.
that is a requirement for this investment?
Yeah, you have to submit your business plan. So and then the
Business plan.
Yeah, the register. It's not a white paper.
White
Like
paper?
it has to. It's kind of like a white paper,
Hey,
but with the
I
financials.
read every syllable of the
and,
44-page
Mhm.
Steemit white paper. That was like a, fairy tale business plan, but they could claim it was.
Mhm.
Adele,
But there's no tech. No one at these crowdfunding portals will know whether that technology is viable or not.
Take my
And
Yeah.
maybe they should
Gonna
have
mind for the
something. What they should do is require
Yeah, mind
a
if I could
oops.
move. Oh, okay.
A
No, you know
company
what?
like
The-
Hosho
No,
or
no,
one of
you,
these.
you and
Something like
the
that
humans
might be a
have been
good
knocking
way
on the camera.
to,
The dogs have been
like
have
put
done
a standard there where someone with a technical
The dogs were
background
able
vets the
to
project on
get
top of
around
it.
it.
That would be a good thing they could add in.
So I guess my question, final question is, what do you think that this means for Bitcoin?
I don't think it means anything for Bitcoin too much. Like the people that really like Bitcoin, they're not. I don't think they're trading that much. They're just buying and holding. And as Tone has said, these might just be noise in the short term of what people can do with the technology or not, but it won't change the overall projection for Bitcoin, or it might even, in my own opinion, I think all this development is, I don't want to say it in front of you guys, but I think it's a good thing that there's that many brains working on this, technology, whether they're getting it right or not at this time. I think the more thought combined across the world, and by opening up these different projects on it beyond just having Bitcoin, it puts people. Would Lightning have been created without all of this other stuff, like a bit of competition from, or pseudo competition happening? It might prompt the developers of Bitcoin to keep pushing forward. I don't know, but over the long term, like I'm a believer in Bitcoin, and that's where I dollar cost average into only Bitcoin most every paycheck kind of thing.
All right.
You want to
Do you
jump?
mind
Thank
a
you.
question?
Yeah, of course.
Well,
Go for it.
Sorry. Given
A little louder.
given how sort of meddlesome and intrusive all of this kind of sounds, is there anybody who's setting up something similar except in a jurisdiction where people can actually do what they want?
I think that kind of leads us to the decentralized exchanges, where you're not really set to one jurisdiction or one government if it's actually decentralized. So there, people probably could do what they want to work on.
And the law is really sketchy about DEXs, right now. Well, frankly, there is nothing that really addresses that if you're not actually using fiat, right?
Can you explain
Platform.
DEXs and what you're going for? Yeah.
Sure. So I'm talking about decentralized exchange. And loosely used, really. I'm sort of actually thinking
because
about
they don't really exist yet, and the ones that exist have such little volume because nobody trusts them.
Right. But what comes to mind when you think about a DEX? Like what exact service comes to your mind when you think about a DEX? Not even
it doesn't like I don't think they're possible right now. I don't see it, because even if you're talking about a decentralized exchange, someone has to A, build it, and B, maintain it. And if those builders and maintainers are too visible, it's not really decentralized. If they have a corporation, it's not decentralized. If they have a like an ICO and a company, they're not decentralized, right? Like, how do you get a volunteer effort on a decentralized exchange? Because they have to be incentivized to fix a major bug that's going to keep them awake for 48 hours straight, maybe, right? So Bitcoin can do that by having the Bitcoin token reward them because they're probably heavily invested in Bitcoin. So, so right now the solution is the exchange is going to have a native token, but that makes no sense because if they can build an exchange that works, someone is going to take their open source code and do it without the token, and there it is. Now it's working. And otherwise, the centralized corporation, and even if it has a token, and they take a fee off of every transaction, how is that different from a centralized exchange? And if they take a fee, where does that fee go?
It's different.
And if that fee goes somewhere, it's centralized again.
It's different from a centralized exchange in that, like, a lot of these platforms don't store like private keys, right? But I mean, you know, if we, for example,
yeah, you can do that as a centralized company. Like my email service does that. My email service allows me to store my encrypted emails on their server. So if they get subpoenaed, my emails are still safe. You don't need to decentralize that. You can provide security without decentralization. It's an option for that company chooses to take on.
Right. So what you're actually saying is that there's no actual like DEX that exists.
Just Bitcoin.
Well, that is a truly decentralized sort of like ecosystem, right?
Yes, and some of its competitors like Litecoin and Monero.
Okay, okay, but you still bring in the argument that if somebody is actually working on it, and interestingly, there is an actual exemption in the Bank Secrecy Act that was sort of like translated in a guidance, in a FinCEN guidance, and it's we're talking about the, you know, whether or not you're like a money services business, right? And that exception talks about software as a service, you know. So are you solely providing software as a service, you know what I mean, and not actually sort of in hand sort of facilitating these like exchanges in and out, you know? Like nobody can call you up and go like, yo, Sasha girl, I lost my money, you know, you need to give me a solution, because all you're doing is actually just providing the platform.
And that's the thing. And if you have people to call, you can call them, right? And this is why, if it's really decentralized, you're supposed to have nobody to call.
Right.
And if you have like known people maintaining your decentralized system, you can call them. And that's a problem.
Right. Right.
Tone, what about the counterparty decentralized exchange?
Well, right. You can provide, you know, you can do this, like even with like a gambling company, you can do it in a way where you're not storing other people's money. It's just like locked up in a contract. And then once ESPN tells you who won the game, the contract pays out to the winners. And the company managing this has no access to the funds. You can totally do that. And that would be the smart way to do it, because you're not wasting resources saving every single bet forever and ever and ever being recalculated. One-time thing. Game ends, the contract, the ESPN, unless the ESPN wait an hour, wait 2 hours, make sure you know who won the game, and then pay it out in a centralized way by not being at risk of, unless you wrote bad contracts for everyone, right? So it has to be completely, each contract is independent. So even if one game gets hacked, the rest of them won't. That's how you kind of have to do it. I just don't see a decentralized system. I can't see it.
So DEX, I guess, in this term would be more like a term of art, you know, because if you delve into it, there's really no such thing as a decentralized exchange. Well, like we said, except for like Bitcoin, right? Mm-hmm. Which is an entire ecosystem. But so I guess, you know, there's a lot of legal.
And it will only work for very dumb contracts, like who won the basketball game, where there is actually a winner, right? It's not going to be subjective. It's not going to be a bet like, you know, how many droplets of water are in this pool, right? It can't be a subjective bet.
All right.
All right, we got to move on.
Okay.
Let's back to the real
question. Continue to host, or at least try my best. So, okay, you're going to it. So BIS. if you guys have been following. So BIS signals that cryptocurrency should be regulated like securities. I
Right.
don't
So
know if
at
you're
least
screen sharing or not.
I'm screen sharing.
Oh, okay.
Right. So the Bank of International Settlements actually understands what a security is, apparently more so than the SEC, and they want to regulate the stuff like securities. And I agree. Like in my opinion, if it looks like a duck, and it walks like a duck, and it quacks like a duck, if it looks like a company, then they've issued a security. Like Ethereum looks like a company to me. Ripple is obviously a company, and every one of these ICOs is a company. Like EOS looks like a company to me. Okay, so EOS and Ethereum look like a company. Ripple actually is a company. All of those things to me are securities. I hope the BLS sees it the same way. And let's ask the lawyers.
So I think one thing that is actually woefully silent in this sort of situation is the definitions of what things actually are. For example, the Treasury refers to cryptocurrencies as convertible virtual currencies, right?
Convertible virtual currency.
Yeah, convertible virtual currencies.
Is that
Yeah.
what it refers to all the cryptocurrencies?
It doesn't differentiate. It really certainly doesn't. Right?
They need some better advisors.
So no, what we need are definitions. I think that's actually, like I said, woefully silent and missing is the lack of definition, because we can sit here and argue ad nauseum, you know, about what the value of a thing should be, but without these definitions, and believe me, I'm not a fan of regulators doing more. I want them to do less. I always want them to do less. You know, I'm like the most hardcore libertarian you can find in the life, right? But some definitions would be nice. For example, you know, how many ICOs and tokens are there floating around right now? Like 1,500 of them?
More,
like 1,500?
Yeah. And to defend the 1,500 tokens, a good 33% of them are not actually floating. They're just like there.
Right. But I think if any asset class comes with a value or a promise of a value attached to it, even through not just not statement but conduct, right? That we just have the understanding that this is going to pump like 800
Yeah, that's what.
right?
Okay, go ahead.
I feel like it's a security at that point. We're done.
Do you think that the BIS is going to follow us and Clayton?
They could follow Sweden.
You're right. So the most recent meeting was in Switzerland. You were saying Sweden, but the most recent was in Switzerland for a very long time. Obviously, we know that a lot were incorporated in Zug. But I guess my question is, they've been dragging their feet even more than we have. Clayton's been making statements and definitely flip-flopping. So just very simply put, nothing, they're not really saying much. If anything, Clayton has said more than even they are. Do you think that they're going to wait on us, or will they maybe step forward? Have they done anything that shows that potentially they, are going to make decisions more than even us in the United States?
They gave that guidance, I think it was in March. Maybe it was out of Switzerland or Sweden. I can't remember now, but it defined the 3 types of tokens: the currency token, the security token, and the utility token. And they gave a definition for what would make something each.
That bothers me, because I don't see a difference between a security token and a utility token.
The utilities,
and Clayton said utility tokens are securities, right? So this convolutes the whole problem.
It does. The way either Sweden or Switzerland, I feel silly, I can't remember which one, but the way they define utility was Switzerland. The way they said it was just if it's for use in to use the system, like if you wanted to, kind of like if it's a video game token or something like that, and it can't have, I think they said something that it can't really fluctuate in value beyond use. Like it's supposed to be not traded on the secondary market, I think, if it's a true utility token. They can't control that though, so it's a misguided definition.
Right. If it trades at a secondary market, I don't see how they can claim it's a utility token. Like an airline mile is a utility token inside the airline. Like a casino chip is a utility token. Gambling credit in your gambling website is a utility token.
Candy Crush tokens.
I didn't know they had those. Actually, I know
They do. They
credit.
like Candy Crush gold bars.
Like World of Gold,
Warcraft.
what's that video game? I'm not a gamer, guy.
Oh, it's like Second Life or something.
World,
That's
no.
such a lie.
Okay, like Super Nintendo doesn't count.
Admit how many games you bought.
Super Nintendo doesn't
Admit.
count. I bought an emulator of every game that was ever created pre the year 2000.
How many do you think that was?
Jesus.
About 20,000 games.
Right.
Oh, but I'm not a gamer.
Right. Yeah.
Right.
No, but I haven't even opened it yet. It's been sitting in my house for like.
It's an
3 weeks.
investment, so maybe it's not a utility
No,
token,
I didn't
Tone.
buy it. No, I bought a Raspberry Pi with a pre-installed. All of them. I bought like every game that existed pre PlayStation.
I just bought a Raspberry Pi too. Yeah.
So
Huge fan.
I'm just gonna move this sideways since we're at 7:22. What is exciting you most and frustrating you most right now? I'm gonna keep it super blanket from a law perspective regarding the cryptocurrency industry and being here in Washington, D.C. with the agencies. Dragging their feet, in my opinion, but sure.
Sure. I mean, how blunt can I be?
Blunt
Yeah.
as hell. I get in way too much trouble.
Blunt
for
to not
cursing.
blunt up to a line where you may get fired, like from
Actually,
a job.
don't
No, get
care.
fired.
Like,
Get fired.
No, and that's why right, yeah. No, I'm gonna be the authentic, me, like period, full stop, the end. But generally I think my major frustrations are with two sort of like organizations, the regulators and the banks. I think of the banks right now, and I mentioned this as the largest attack vector in the space. And right now, I'm actually starting to think that they're like
Attack vector from
cartel.
by who? They're attacking or they're gonna get attacked?
They're attacking.
They're attacking.
Yeah,
Okay.
by denial of service attacks. Okay.
Mhm.
For example, we see a lot of clients doing very legit things, fixing things, companies, wonderful builders. They're biddling all the way through, and they're being denied accounts. And it's weird, because you have these, happy-go-lucky, compliance people that are always ready to spot terrorism and fraud and all of that without any sort of actual evidence to back it up.
The whole terrorist angle is so bad.
It really
It's
is.
so bad.
There's no numbers to support this, but who can go out there and be like, listen, we want some accounting on what's going on. But
Well, I think more people get killed by coconuts every year than by terrorists.
You're probably
it's
right.
really crazy.
yeah, and it's really it's one of these things that I kind of wonder. So we're actively working on solutions to help people move their stores of value seamlessly. But the banks have been just a massive hurdle. The regulators, I don't really care if they do nothing. I want them to do nothing. Like, do nothing more. Please do much more of nothing, right? But at least give us some guidelines, because I don't think companies should be operating in fear if you want to foster an environment of entrepreneurship.
Mm-hmm.
So that's my biggest frustration. My happy up in the space is just the energy and the fact that people are so excited about it and really just very excited to create like solutions. A lot of them are really stupid ones, but some of them really have utility to them. And I would nutshell, that's it.
Now another question to get you in trouble.
Oh boy.
Wait, I want to get Sasha's take on this.
Yes, please.
What's been frustrating you? You've come to Washington enough times.
Yeah, what's frustrating to me is it's a really unfair playing field for the actors that are not following the securities laws and the ones that are. They're not. The ones that I'm working with are at a big disadvantage by following Reg D or the regulation crowdfunding compared to if they were just going out and raising money. But the risk of that, even though there haven't been very many enforcement actions, I couldn't advise someone in America go do an ICO and hope for the best. That wouldn't be prudent. So all I know how to do is say the way that we have some guidelines on how to do it, and they're not able to raise nearly the money they could otherwise. And we got one other really frustrating thing. It's not Ross Albright's petition for cert was denied today. So that
Oh, it
was
was the night today?
Oh man.
Oh no,
Wow.
I was just on a radio show with his mom last
yeah.
week
Oh
when we
no.
were talking about this.
Mhm.
Oh my
So,
God.
that was
horrible.
frustrating. So now all that they can do is hope that President Trump or any later president, as long as he's
Well,
alive,
Trump ain't
will
gonna do
pardon
it.
him. Yeah, or they can go with a Brady motion saying that there was some exculpatory evidence that wasn't brought into court, which was that the corrupt agents were involved. So all that information about the corruption was never seen by any jury. So it's a long shot, though. They have a year to put that in, but that was, frustrating to see today. It was kind of hopeful that they might get something forward there.
Yeah, no, that is really, really bad. Yeah, that's really bad.
I guess it gets you in trouble right now.
Sure.
All right, what was your
Go
next
for it.
question?
Go for it.
Very honestly.
Yeah.
And this is just a personal question.
Yeah.
That I wanted to know. The vast majority of brilliant law firms, and I'm going to get myself in trouble right now, but Perkins Coie, Cooley, etc., who have structured the vast majority of very expensive Silicon Valley ICOs, and have marketed as such, etc. Do you think, one, they really had no idea that these were extraordinarily scam coins, or two, they absolutely knew and they covered their asses because they know exactly how to cover their asses because they are law firms and very brilliant lawyers, and therefore continued with the process knowing that they would be safe?
Wow. Holy.
I want to answer that as well.
I'm so sorry.
I can go first. if you want to
Joe,
think
go
about it.
first, Joe.
I'll go
for
first.
It. Go for
Okay.
it.
So my opinion, my non-professional opinion, I think at first they thought this was going to be all cool and they were going to be, okay, so let's just say as much shit as I give Ethereum, Vitalik is a very honest guy. Like, Vitalik is an honest guy. You ask him a question, he'll give you an honest answer.
Yeah.
Like, Vitalik's honesty and integrity is not really questioned. Some of the other co-founders maybe, right? But Vitalik is fine. So I think when it started, they really were focusing on, the top, like to say, like it's all about the team.
Yeah.
So I think in the beginning, the first couple of ICOs had some really honest people trying to do something. Maybe nobody knew that they're all going to be scams, but they were like honest people trying to do something honest, turned out to be bad. Then it slowly got, well, this person is almost as good as our last person, but they're still okay. And then there's no actual line. Okay, this person's a straight up scammer. And then you realize it when it's too late. And then you got to start covering your ass.
Right. And we talked about this a little bit on the last podcast that we did together, where I spoke about talking to Vitalik in 2014 at TNABC, where he told me about the crowd sale, right? He was very sincere and very sweet. I actually like Vitalik.
Well, he was like
a lot.
18 years old back then.
Right. And he was like writing for Bitcoin.com, right? Like, what was he doing? Like, I was like, oh, he's such a brilliant writer. He had written this stuff about like AML and KYC stuff. I was like, oh, he's just a wonderful, very smart boy, right? But going back to lawyer, so we did talk about the conduct, and what I got from him was, hey, I'm trying to build this ecosystem that's really awesome and gonna solve some problems, right? There was none of this ICO jargon, which is completely lost its shit as far as I'm concerned. And as far as the lawyer is concerned, I was thinking about this on the way over here today. I think lawyers are criminally overpaid. I think that most law firms will do anything for a retainer. And that is why I opted to work with a law firm of people that I thought had different ethics, especially in the particular practice that I work in, because I can control how that works, right? The fintech practice. But generally, I do think that once you pay a lawyer to do something, they're going to massage, generally, because this is not a collective opinion, right? but I'm saying that a certain kind of person I believe is drawn to that kind of profession. I really do. I'm sorry if I get like hate mail for it or get my knees mashed up, you know.
Yeah, those lawyers, those
The mom.
lawyers know
Those
some
criminal
people.
lawyers. But I do believe there's an element to the profession that sort of calls to a certain kind of person, and that's not what I'm in it for. And I do think that a lot of the firms who push these ICOs out know exactly what they're getting into, or don't care to know what it is they're getting into because they're getting a fat retainer.
Yeah,
And
you know,
that's the bottom line.
I've been looking for one of those accountants, and then every accountant I talk to wants to be honest about everything, and I'm like, all right.
It is really hard to be honest. I mean, like just generally, I'm sorry to be so philosophical, but it is very hard to be absolutely extremely honest, especially in a very capitalist society, which I am a capitalist, but I mean, it goes against interests, and we're actually moving into like, you know, the prisoner's dilemma, even at this point, you know, where people act against their own self-interest.
For collusion, absolutely true.
And
No, please go.
one thing I noticed is people think they have a really solid project that's going to be good for the greater, you know, public, but they might not understand the technology the way that they think it is. So if there was some kind of standard out there, like a Hosho or some kind of person that could go through and vet whether or not their technology is good and put some kind of seal
I'd
of
like
approval.
to think our show does that, but
But you don't, but on each project, like before it got listed on an exchange or before it was able to take money in, have something like that might help. But right now, I think it's a lot of people meaning well, but not knowing what they're actually building.
Tone, weren't you in like a rap video?
Oh,
God,
tomorrow,
stop,
the world
tomorrow.
premiere is tomorrow. I may or may not be in it.
Coin Daddy.
Yeah,
What?
The Coin
Tone
Daddy
was in a rap video.
Part 3 world premiere
Part 3 is
is
coming
tomorrow. It's gonna go. What time did we say it was? 1
1.
I
1
can't.
p.m.
Can we drop a
1
mic?
p.m.
Is there a mic
Eastern
to drop?
tomorrow.
Because
1 p.m. Eastern tomorrow.
wow.
Tone,
All right, so the people are making me do a little price thing. So
we
whenever-
drop
I'm excited to hear that.
Oh God!
Wow.
I guess
we can grab more wine while he's doing
my
it.
cheddar.
Okay.
You know, this is gonna be quick. We should probably go get some food because all we've been doing is drinking.
Yeah. So should we take a break or?
Yeah, no, I'm just gonna do a quick price thing. I'm gonna do a screen share on the price, and I think we'll call it a day. This was a test run of the Bitcoin law review. We're gonna have these once a week. We'll try and keep them consistent on Thursdays, and we'll you know, get some more lawyers maybe involved. It'll be a little more organized than today, but then again, you never know. This could be consistent. You know, hang out with some wine. DC isn't that far from New York.
True. And I'm seeing all these comments. I am bionic.
Yes.
Yes.
It is a thing. It has excited me forever. And if I could be more bionic, very honestly, I would love to be. I don't know how you guys
The
feel about
chat,
this, but
dude,
seriously.
The chat,
Like,
like seriously,
absolutely.
like it's better than Tinder. Like if you're single,
Oh yeah.
you know,
yeah.
you girls are, it's your lucky day because a lot of interest on the chats.
All right. So here's
The
the
odds are good, but the goods are odd.
yeah. Here's the weekly chart of Bitcoin. This is not looking good. Today's already Thursday. This weekly candle is down at 58.32. What time is it? 7:35. Like I told people, Bitcoin will close below 6,000 at some point, and it's about to do that. My target still remains. I've been a broken record for the last few weeks, at least the last 3 to 4 weeks, where I kept saying the 5,000 will be breached in the first half of July. I think that's as detailed as any analyst predictor has ever been in the world of crypto. And that has been my target, and that remains my target. It's unfortunate. It sucks, but it is what we have to go through. After that, let's see what happens, right? I'm anticipating a bounce off 5,000 that's going to be somewhat substantial. Don't hold me to that. Let's deal with the bounce when we see what happens upon a $5,000 touch. So this is the weekly chart. We're still accelerating faster than normal. Let's look at the daily. The daily is about to give you a brand new daily close. That is very bearish. The daily just gave you a trading indication to short this thing below $6,000. So the moment it fell below 6 at any point today, that was your cue to short based on a daily chart. Your stop loss is very obvious. It's at 6,300. Here's the 12-hour chart. The 12-hour chart told you to short at 6,060 about 2 days ago, and we have now accelerated. I drew these arrows a while back. I drew these arrows on the 23rd. I have no clue what today is. What is today? 28th. And it looks like my target is going to get hit. And I drew these things 5 days ago, guys. And they were like random arrows. Well, they weren't that random. They were anticipated. And it was my best representation of what Bitcoin will probably do. And it's only a 5 of 9. So if I have the luxury to adjust these arrows, I would do this. I would move this guy this way. I'm going to move this guy this way. I'll slide this down. Because remember, that's only a 5 candle. I always look for a 9. So let's say 5,500 in a couple of days, you know, back up to this area here. Let's get that up. And then get this guy up there. And then early July, I guess that's July 16th. So sometime before July 16th, just under 5K. There it is. Okay. So that's, I just adjusted these arrows. I have to remember that I adjusted these arrows, but that's what they are right now on a 12-hour chart. Let's go to the 4-hour chart. 4-hour chart gave you this weird candle that I really thought was weird. Your red 2 went below a red 1 right there. Look at your money flow. It is absolutely horrible. Your RSI is almost oversold. Your MACD, I have no idea. It's just crossed over. Everything looks bad. If we get below that dotted line, that just means that it's an acceleration. This is a very old channel. I'm not surprised. We're going to get back into it. That's only a 4. Your Q to short was on a red 2 below a red 1 on a 4-hour chart. Your stop loss should have, on a 4-hour chart, should have been at 6,200. That's your short play. You're only on a 4 of 9. So you're looking at 5 more candles of potential downside. Short, small rebound, and then probably lower into a countdown. Your 1-hour chart is on a 9. So be very, very careful right here. Don't short now. Your Q to short was right in this area of 6,100 based on the hourly chart. Right now, I would not be shorting because you're on a 9. Look for a 1 to 4 hour correction back to the upside. Let's see it get back to 5,900, maybe even 5,950, and then it should accelerate down. So right now is the worst time to short based on an hourly 9. You want to wait for a red 2 to go below a red 1. So this hour is about to end in 20 minutes. Next hour is a no trade zone. If the following hour is trading lower than the next hour or the current hour, whichever is lower on an intra-hourly swing, that's your cue to short for a countdown on the hourly chart. Your 30-minute chart hit a 9, but it got overwhelmed by the higher level time frames. So your 30-minute chart actually is telling you to short immediately, but it's in conflict with the 1-hour chart, so I would not do it. Gold continues to go down. That is very, very bad. This is the weekly chart of gold. If gold goes any lower, if gold gets to the $1,200 area, I'm gonna put my $700 target of gold back on the table, which I'm not even sure why I took off the table to begin with. The monthly isn't looking good either. The S&P did something weird today. What do we got here? The S&P bounced. This is the weekly chart. The weekly chart is still in a 1 to 4 candle correction. It's holding the 30-week moving average, which is impressive. The daily chart had a 9. Remember, your Q to short after a 9 is when a red 2 is below a red 1. So unless tomorrow's price is below today's price, the S&P is on at least a 1 to 4 candle bounce and maybe a full bounce because the weekly is in a second week of its 1 to 4 week correction. So anything can happen. That's pretty much it for me, guys. My website seems to working again. Please check out tonebase.com. I am changing my schedule around. I'm going to add, just talked to my manager today. We might be adding Chicago to the list, and Vegas is going to be moved to the 18th of August. This weekend will open up. I really thought Atlanta only had like 2 seats left. I'm not sure what's going on there. Let me do this. Maybe we added more seats. I got to check out. Atlanta seats are going hot. I can't believe it. Boston, hey, you know what? The South is crushing you guys. Boston's still planned for August 4th. Anyway, check that out. Education, learn trading. And if you like all my videos and we're going to continue to bring you more content, please check out the affiliate website. And if you're going to use any of these companies, please use my website. It's not going to cost you anything extra. And as far as I know, none of these are actually scams. It's very hard to pass my filter. And so please use these links to support my work. On that note,
we're the only ones left.
I know everybody. The lawyers walked away. On that note, thank you so much, guys, for watching us. Oh, guys, she makes fun of my like. It's not even a wave. It's like, oh my god. Well, like, all right, you do it.
You can wave.
I like your hair like, right now. What's your hair? No. There it is.
Okay, goodbye, everybody. Thank you so much. Every Thursday.
Bye, guys. We'll try to
do your little alligator.
They'll eventually. I'm a Seminole too. That's so bad. Oh, it's over there.
Can I? Wow.
Yeah, you can wave in there.
No, I'm gonna say. Oh my god. I'm sorry. The humans. Oh my god, it's like the worst ever.
Okay, bye, everybody.
It's terrible. The
I know.
dogs were awesome,
the dogs did a better job
Yeah.
on getting around the camera situation. Yeah, and like.
Than the humans.
Perfect. Excellent.
Turn to your alligator.
There's another one.
Okay,
Bye, guys.
everybody.
Wait, how do you stop this again?
Over.
No, it's over here. No, it's.